Fox. I am Bill McLoughlin, editorial director for Bridge Tower Media's Home Furnishings division, which includes Furniture Today, Home Textiles Today, Home Accents Today, Designers Today. As you can tell, we make the most of today. Gifts and decorative accessories, home furnishing news, and casual living. Gene is a renowned speaker, small business expert. He's appeared on Fox News as a regular columnist in the Philadelphia Inquirer, Inc. magazine. He has spoken at both Furniture Today's Leadership Conference and will be a speaker at our upcoming betting conference in August.
Looking forward to it.
His presentation will be sponsored by Therapeutic, and I believe, Gene, you've also spoken at Therapeutic events. So,
yeah, did that a couple years ago, so I'm looking forward to it. It'll be great.
Well, good. Let's jump right into it. I mean, we were talking before we went on air about how quickly things are changing and how concerned people are and how much they need good information. What kinds of information are you offering? What kinds of counsel can you give to small businesses who right now are just really getting hammered?
Yeah, so I have a lot of information to share, Bill. So I'll talk for a bit, and then I'm going to ask, by all means, you know, if you've got questions, if you're watching this, by all means, send in your questions. I'll be happy to answer them to the best of my ability. Some of the facts are changing, but then again, a lot of things are becoming more clarified, so which is good news as we're getting things along. So here's the situation. If you are running a business, a small business like mine, I have 10 employees. So a lot of this stuff I'm talking about is stuff that I'm actually doing as well, because and we're recommending a lot of our clients. And you're feeling the pain, you need help. There is help available for you. Let me talk about, first and foremost, and most importantly, is the help from the federal government. So right now, the federal government is offering help in two big ways. Number one is they are offering straight loans through the Small Business Administration, SBA, SBA.gov, and those loans are called the Economic Injury Disaster Loans. It's actually a loan program, Bill, that's been set up already. It's been around for many years, and it was designed to help business owners that were experiencing, they were in flood areas or hurricanes, it's for disasters. And it's just been expanded because every state has been allowed to declare themselves a disaster zone because of the coronavirus pandemic. And now these loans are available for small businesses. They've been refunded with a lot of money from the government to do that. These loans are a little bit different. They're issued directly by the SBA. So you can go there, you can fill out on SBA.gov the loan application, and then go through a very quick approval process, and then they will get you money within a week of applying for these loans. The loans are very low interest rate. They are, if you're a nonprofit, which I don't think many people watching this maybe are, but those rates are 2.75%. For-profit companies are 3.75%. You can borrow up to $2 million, and you can pay that back over a 30-year time period as well. So it's a long time to pay back. It's just like a $50,000 loan would cost you a few $100 a month, like $280 a month to pay it back over that. So that's a pretty good thing. And what I'm hearing from the SBA is that sort of the green light is on. Their approval requirements for those loans have been relaxed significantly. You can definitely, most businesses would be able to be approved for loans. If you're a small retail shop, if you're an independent contractor, if you're a sole proprietor, you've got your own business, you file a C Corp tax return or an S Corp tax return, or you can apply for these loans. You are applicable to get these loans. So I urge you to go ahead and do that. In addition, they've just started this other program just this week. It kind of took me by surprise, but if you apply for a loan, they will immediately, when I say within a couple days, advance you $10,000 against that loan approval. If for some reason the loan gets declined, you keep the $10,000. It's like a grant from the government. But if the loan obviously gets accepted, that $10,000 becomes part of your loan balance. So just want to make sure I'm clear on that, Bill. That's like the first thing that I want to talk about. There's two big parts to this, but part number one is Economic Injury Disaster Loans, SBA.gov. Does that make sense to you? Did I explain that right?
It makes a lot of sense. And I mean, that's completely separate from the CARES Act that everybody's talking about.
Correct. I'm going to get to that soon.
and that the government is really taking action on very quickly, that people can get almost immediate relief. That's a really important piece of information.
Correct. So it's good stuff. So you brought it up, and I was going to get to it next. And so let's talk about the CARES Act, okay? And the CARES Act passed. It was a week ago when it passed. It is now getting up and running. And here's what the deal is with the CARES Act for us as business owners. It set aside a $377 billion fund, most of it being allocated towards another program for business owners for relief. It's being called the Paycheck Protection Program. It is under Section 7A of SBA loans. Not that that's important, but that's what it is. And this is different in the sense that you can only get this loan through a bank. Now, Secretary Mnuchin has said that all banks that are insured by the FDIC and financial lenders are able to give out these loans. My recommendation to my clients, is to focus on just those banks that are SBA approved banks. So those are banks that are already lenders with the SBA. They're familiar with the process. They've done these loans before. Because what they've done is they've taken this existing loan program called Section 7A and expanded it. So you want people with experience. Where do you find an SBA banker? You can go to sba.gov. They have a search engine that you can look for. It ain't working very well. So your best option is to go just Google and look for Small Business Association, SBA banker near me, SBA lender near me, and you will find that banker. If you are working with a larger bank, my advice to you is to find the people that specialize in SBA loans at that larger bank. Your regular banker might not be so familiar with some of these rules. So you got to find the banker.
Is there a way to find who those people are?
You got to ask. You got to ask. So if you're dealing with a Wells Fargo or Bank of America or Cap One, any of those big guys, whatever, go on their website or call them. But you got to make the effort to ask and find who their SBA banking. And the larger the bank is, sometimes they actually have a group of people that handle this. And this group, these people are being inundated right now. And let me explain to you why. These loans work in this way. You can apply for a loan. The loan is based on your payroll. And the definition of payroll is pretty large. It's your payroll over the last 12 months, and it's expenses like compensation, retirement, health insurance, vacation, severance pay, and independent contractors that you paid that didn't necessarily provide a service, but you were paying them instead of paying them as employees. So there's a little bit of gray area there as to how they're treated, but you will probably get most independent contractors that you use can be part of this calculation. You come up with your payroll for the past 12 months, and you can take 2.5 times that amount, and that's what you would be available to borrow from this banker under the SBA program. So again, if you've got payroll of $1,000, you can borrow $2,500 from the bank, if that makes sense. The total loan that you can borrow is actually $10 million that you can borrow. The interest rates can be very low, at 0.5% up to 4%. And the term of the loan can be paid back anywhere from 2 years to 10 years. You're going to negotiate that with your SBA banker. It's all about your banker. But here's the big deal. You get the loan, and then for an 8-week period between February 15th and June 30th, your payroll expenses, the same expenses that you used in that calculation, plus interest on your mortgage, rental payments, and utility costs that you have as well. Those costs, you could submit them back to your banker, and those amounts would be forgiven from the loan, which means that if you took out a $10,000 loan and say you had $7,000 in those costs during that 8-week period, your loan balance will go down to $3,000, which means that it's basically free money from the government. They're actually just granting you that money to use to hopefully get you through this pandemic. That's what it is. There are some restrictions on the loans, just to make sure. One big one is you cannot include in any of these calculations any employee with any compensation over $100,000 a year. So if you've got an employee making $140,000 a year, you can only include the first $100,000 of it. And if you lay people off during this period, you will be penalized. The amount of forgiveness will be reduced because of that. So you have to work on that with your banker. Go ahead. You were going to ask me a question.
When you say the amount of forgiveness, so is there a forgiveness around the number of employees that you retain?
The forgiveness is the actual expenses. So, say at the end of June 30th, you're going to go back to your banker, say in July, and you're going to say, hey, banker, during this 8-week period in our agreement that ended whenever it ended in between June 15th and June 30th, here was my payroll costs that we agreed on. Here's my utility bills. Here's what I paid for rent or lease payments during that. You submit that to your banker, and your banker says, thank you very much. I'm going to reduce the outstanding balance of your loan for those amounts. So it's based on your actual costs that you incurred during that period.
But you don't get that forgiveness if you lay off employees during that.
Correct. You don't get all of the forgiveness. The idea of these programs is to keep people employed so they don't go to unemployment. So, and they're hoping that they can help the employers out to keep people on their payroll and to keep them going. So that's important to know.
So I have a question here specific to that. Is it 2.5 times the monthly average payroll or
Yes.
the annual payroll?
So you take your annual payroll and then you take an average off of the annual payroll, and then it's the 2.5 months of your average payroll. That's what it is.
Okay, so it's not 2.5 times of your average. So you don't take, let's say your annual payroll was $10 million.
Right.
Not 2.5 times 10 million. It's 2.5 times 2.5.
Average monthly, but right. So that's correct. So hold on. So when you're looking at what's available to you, if your payroll was 10 million over that 12-month period of time, then it is 2.5 times what your annual payroll is. That's what's available to you. But it is, again, it's up to $10 million. What you can go for forgiveness is just during that 8-week period of time, if that makes sense. Okay.
Good. By the way, we've got a bunch of live viewers who are on right now. I want to continue on the CARES Act, but we do have some folks who would like us to go back. So before we cut to the end, folks, I know you're there. Stay with us. We're going to go back and we see those questions about the earlier portion, and we will recover parts about independent contractors, and we will talk about those SBA loans.
Sure.
Are there other parts of this CARES Act that companies need to be aware of?
There's additional money that's put aside for some counseling from the Small Business Development Centers and SCORE, which is an agency of the SBA. So I do think that that's good in the sense that if you are looking for some help, some business advice, some free business advice by experienced people, look up Small Business Development Centers or look up SCORE, SCORE. Those are both agencies of the SBA, and they can provide people that can counsel you and advise you and help you through all of this. And it's free advice from people that have experience. These aren't government workers. These are people that have done this for a living before, and a lot of them are volunteering their time.
When people factor in those expenses that they can use to get forgiveness, do leasing expenses, rental expenses on facilities, do those kinds of things get included in that as well?
Right. So when you're looking for forgiveness itself, just to make it clear, and I'm going to read off, there's actually a document, and I can send you, Bill, if you want, like what some of the D's, like a link to this document from the Treasury Department. But just to read it off, when you're what's considered to be payroll costs for starters, salaries, wages, commissions, or tips are all part of payroll costs. Employee benefits, including vacation, health insurance premiums, disability premiums, and payroll taxes, as well as independent contractor expenses as well, can figure into your payroll costs. That's the definition of what they're calling it, and that's what you multiply times 2.5, and that's also what you're eligible to receive as far as forgiveness when you put in those actual expenses. Now, in addition to those payroll costs, you can submit your costs for your rent payments, which includes lease on your office, for example, or the interest on your mortgage, if that's different. It's again designed to help you pay for your facility cost, right? So either your rental payments or your interest on your mortgage, as well as your utilities cost during that 8-week period, those are all eligible for forgiveness.
Sounds like a great program. We're getting a number of questions about independent contractors and people who might be self-employed. I know in a lot of the industries we cover, there are a lot of independent manufacturers reps who are very often 1099 employees. They have their own office. They may work from home. Whether it's through the SBA program we talked about earlier or what we're talking about now, what things are available for those?
Great question. So believe it or not, for independent contractors, there's actually quite a few options that you have, and you're going to have to weigh what you think is better. And let me go through. For starters, you can apply for unemployment. The unemployment rules have been relaxed by federal mandate. So now every state is required to provide unemployment compensation, not only for employees of companies, but independent contractors. And that includes sales reps or realtors or people just working from home. Even if you have an LLC or a sole proprietor, but you work as an independent contractor for a couple of different companies, you can apply for unemployment. So I would urge you to do that. You show evidence of the income that you've been earning so that you can justify what you think you're owed from the state. And remember, the state is also required to add up to $600 per paycheck per the stimulus bill as well. So some of the independent contractors that I know, they're applying to their states and they're actually getting a pretty good deal as to what they're to compensate them for. And I remember that's 4 months. That'll take you through July. So I absolutely recommend that you apply through your state. Just keep in mind, the states are inundated right now with requests, and I know I've been reading a lot of them are falling behind, and so you're just gonna have to be a little bit patient and dealing with the state system. Option number one. Option number two is the contractors, sole proprietors as businesses as well. Remember, you can't double dip. You can't get unemployment and then also go to the SBA. But if you want to take the business route, you can do the same option that I just spoke about. You can apply for an economic, injury loan, for example. And as an independent contractor, you can get a loan at very low interest that could see you through these days. And then you just have to pay it off as a loan. But again, it's a low interest loan and the terms can be up to 30 years. The other thing you could do is you can apply under the Paycheck Protection Act as an independent contractor because independent contractor salaries, are eligible for getting reimbursed under that Paycheck Protection Act. So you can apply for it, go to an SBA banker, ask to apply for it for your business. The only person there is you as the independent contractor, that's fine. But as you can show a tax ID number that you have a business account, a business tax forms that you're filing, a C Corp, an S Corp, an LLC, for example, then the bank can loan you the money as a business and then forgive whatever costs that you have. Now remember, as an independent contractor, none of these loans or programs are designed to substitute loss of income other than the unemployment program. So, what the banker is going to be saying to you is, I don't care that you're not getting any income anymore. I just want to reimburse you for any costs that you have. So if you don't have any costs, you're not going to be able to get much of a loan. So your best option may just be just going to your state and applying for unemployment insurance directly from your state, because that will take care of your lost income. I hope that makes sense.
It does. And the questions are just stacking up here. I mean, they're turning and turning. Someone asks, if you apply for an SBA disaster loan, would that still allow you to apply for the PPP CARES Act, or is it one or the other?
So it does. So you can apply for both loans, and my recommendation is to apply for both loans. Just because you're applying, and even if you get accepted, doesn't necessarily mean you have to take the money from both places. You can always decline one if it's too much for you. But the rules are, and it's just so you know, the rules are this: you can't use one for the other. So the SBA is almost trusting you to say, if you do get a loan through the Economic Injury Disaster Program and you can't use it to pay for the same payroll that you're getting a loan from the payroll protection loan, that you're going to get reimbursed for. So there's a lot of overlap there. The people that I talked to at the SBA and also some of my banker friends, a lot of them, they say off the record that they know there's going to be some fraud here. There just is. And right now, the government is more concerned with getting the cash out the door. I don't know what the government, controls that they have to audit all of this stuff. But that's the rules they're telling us, is that, yes, you can apply for both programs, but you can't intermingle the money. So you better, you want to keep good, close accounting of how you're using both those funds in case you ever do get audited.
All right. So if you're watching this, no gaming the system.
Right.
Don't hoard the toilet paper. Don't hoard the loan money.
No double dipping. No double dipping.
I have an interesting question here, and it's very, very specific. And so someone asks, if I furlough employees starting Friday, rehire them when they are allowed to reopen, accept a PPP loan at that point, is that forgivable, or do they have to keep them on the payroll now because they're in Illinois and they have to shut down now?
It's only from the time that you accept your PPP loan. So, you're going to agree with your banker as to what the period is for forgiveness. And I will say this, the SBA is giving a lot of leeway to its bankers because it just does not have the resources to get too deep down into the weeds here. So if you get accepted for a loan, but then you say, listen, I'm going to lay my employees off, I'm going to bring them back in a month, and then I'd like to get the loan starting that month, and then I'm going to be incurring payroll costs after that. Again, as long as you're within the period up to June 30th, and you can use 4 weeks of that, or 8 weeks is the maximum, that would be acceptable and eligible for forgiveness.
So the clock only starts ticking on retaining those employees once you accept the loan.
Correct. And it's really going to start clicking. And I think it's the same thing we're talking about, Bill, is when you sign the loan docs with your SBA banker, which is, like you just said, when you accept the loan. Yeah, I will say that, again, as we're getting further into this thing with the Paycheck Protection Program, this is definitely a deal between you and your banker. The SBA is giving the guidelines to the banks, and then they're basically saying, you guys run with it, right? So in the end, you're going to have a loan agreement with your banker, which they're going to have guaranteed by the SBA on their side. So you want to really go through that agreement in detail. You want to make sure that the terms are what you expected them to be. Their forgiveness calculation is what you expected it to be, like we're just discussing. And as well, things like you just said, Bill, like, when that loan starts and when the forgiveness period starts and when it ends. All of that is very important to know. But in the end, it's in the loan agreement between you and your banker.
And is this money that is specifically being given for the purpose of a loan? So this isn't money that the banks are going to take and use in any way to enhance their own profitability. This is money that they are specifically given, and correct me if I'm wrong,
yep,
for the purpose of getting out into the marketplace.
That is correct. I tell you one thing, guys, and this is why you want to speed up the process. I have a concern about the banking system, the banks in general. These loans are not very profitable for a lot of these banks. They're low interest, and a lot of it's going to be forgiven. So if you think about it and you're a banker, you think like, how am I really making a lot of money on this? Now some smart bankers will use this as an opportunity to establish relationships with small businesses and customers that they might not have had the opportunity before. But they're also going to get inundated with a lot of people asking a lot of questions and a lot of running around. And I do get a little concerned that not all the banks are going to be like so motivated to do all of this, because it's going to be a lot of headaches for the banks.
Okay, so you're talking about headaches. You're not talking about there being concern about banking. I want to be really clear.
Oh, no, yeah, good point. I'm not saying right now, and that's a whole other conversation why this recession that we are in right now and will continue is nothing like 2009. Banking system is fine right now.
Okay, I just want to make sure, because the mindset that's out there now. The last thing you want to do is, the best thing we can do, I think, is create clarity and give correct information.
Agreed.
So, okay, so I have another question here. Boy, I'll tell you, these people are really interested in what you have to say.
People are really into this. I just, as an aside, like we were talking before, I did a bunch of TV stuff recently. I'll be on Fox and Friends in the morning as well, talking about this, but not in this much detail. But I did one appearance and I gave my Twitter address. It's at Gene Marks, by the way, EMARKS. You can feel free to tweet any questions to me. I got buried on Saturday with 3 questions. There's a lot of business owners out there that really want to know, and a lot of people are scared. I get it. It's scary, and they want to take advantage of these programs.
Well, you have a very valuable asset right now, which is knowledge that people need.
Yeah, it's true. But it's an asset that I'm trying to get the word out to as many people as possible because I think a lot of people need help.
Well, I think that rebound in your favor over time through trust and building relationships. So we have another question here. I'm not sure if you already answered this. What about statutory employees who file Schedule Cs like an independent contractor?
Right. Well, if you file Schedule C and you're an independent, if you yourself are an independent contractor filing Schedule C, again, you can try and get the business loan or the Paycheck Protection Program as well. You're eligible to apply for those through the SBA. My recommendation though is to go for unemployment insurance because again, the unemployment insurance is it's replacing income loss. those loans really designed to provide working capital and help you with operational costs. So they have like sort of different objectives in mind.
How does this interact with unemployment? Because somebody asks, if you choose to sign up for that option, do you still have to actively seek employment each week and report that to the Employment Security Commission?
Yeah, I mean, you have to still follow the rules. I mean, that's the assumption here. So whatever rules that your state has for unemployment, you're going to need to continue to do that. Obviously, you can try to seek employment in an area where we have 30% unemployment right now. It's going to make it a little bit more challenging. But yeah, you still have to apply by the rules.
What about people who, and again, this is a question, what about somebody who accepts unemployment for 8 weeks? That runs out in June.
July.
Can they then apply, or July, can they then apply for this program?
Yeah, I mean, this program ends on June 30th. So, you know, if you accept unemployment and it, you know, and it runs out and it's after June 30th, then, you know, you're going to be out of luck. If you apply for this program before June 30th and you're on unemployment, you're going to have to disclose that. So it's a likelihood that you won't be accepted into the program. So you're really going to have to choose one or the other.
Some difficult choices.
Mm.
Somebody asks, if they apply for the Paycheck protection as an LLC with a home office, can they use that money toward rent and utilities, or just a percentage of what part of the home is, like what part of the home is their office?
Just the percentage is what it is. So, I mean, it's not designed to pay for your personal mortgage or your personal utilities. These are business loans. So the intention is that you're going to be paying just that portion for that your home office is using for, you know, for rent and for utilities. And again, your banker is going to remind you of that as well, because you're going to be going through your banker.
Okay, another interesting question. Somebody says they still have a little bit of business trickling in.
Okay.
A lot has been canceled, placed on hold. Can they apply for unemployment while they still have business trickling in? And I guess the sole proprietor, that's an interesting kind of a question.
Yeah, it really is. I mean, it really is going to be up to the state to decide whether or not they accept you in for unemployment and what, you know, what the minimum amount of income that you have to show that will be applicable for that state. So you're going to have to apply to your state and find that out. I really don't know.
Mm-hmm.
They're going to have you disclose as part of their application process if you do have any income coming in. So that's going to have to be made, you know, legally done, and then they're going to have to make that decision. Just bear in mind, guys, that you know, this whole concept of independent contractors and sole proprietors and all that applying for unemployment, states have never had to deal with that before. You know, I mean, it's always just been employees. So even their forms when you apply, I'm hearing from a lot of people that didn't even have any room to fill out, you know, if they're saying, look, I'm not an employee, who's your employer? Like, I don't have an employer. So the states are playing catch up ball, and how they're going to evaluate independent contractors, I bet is going to vary by state until the federal government gets around to coming down with some kind of guidelines. And that clearly is not going to happen right away.
Great. So someone says, if they have salespeople who are employees and the company pays payroll, but they are a statutory employee,
Mm-hmm.
how does that affect the calculation of payroll?
Well, when you say, I'm not quite sure what we mean with salespeople being statutory or statutory employees. So I would need a little bit more clarification on that. I can say that.
Retype your question.
Yeah, really. Just retype it. But I can say this much, Bill. If you've got, you know, salespeople that are employees of you and you want to keep them working, and I really do recommend that you do, you know, again, apply for the payroll protection program, because that will fund their compensation. And remember, you're going to put in to see what's available. That's that 2.5 times calculation to see what's available for you. And then after it's all over, after June 30th, you'll put in for their actual expenses. And even if if those salespeople wound up selling stuff and getting, you know, commissions, and that's part of their payments, that can also be your forgivable expenses on your loan.
Okay. Somebody asks, on unemployment, how does the extra $600 work?
Well, the extra $600 is being added to everybody's paycheck as an additional amount that people are getting for unemployment, and it's just across the board. It depends. Again, the states have their rules as to who can accept unemployment and what the maximum unemployment is. But whatever unemployment that you would be receiving normally under your state, the federal government is literally adding an additional $600 onto that. The idea there is, the politicians say that for the average employee, it should almost pay for their, 100% of their compensation. Obviously, if you're a little bit of a higher paid employee, then it might not be 100%. But that's a big bonus. And that's $600 a week. So it's a lot of money.
It really is. So the person who asked that question about salespeople, she says they file as statutory employees. Does that?
Okay. Don't know what that means. I'm sorry.
Okay.
I'm sorry. And it might just be me. I apologize.
I suspect it's a more complex question, and it's difficult in this format to try to get all of the nuances of I mean, you're really being incredibly patient. I hope folks really appreciate how difficult this is for Gene on the other end to try to field all of these questions, very specific questions on the fly. We really do appreciate it.
They're great questions, and it's so important. It's so important.
Somebody asks, if you apply for the $10,000 grant, do you have to then complete and take the loan if you're approved?
Great question. So yeah, so if you are, if you are approved, and by the way, I think I mentioned this earlier, this was kind of like a new little curveball they threw out. So the way the Treasury Department is explaining it is that if you apply for the loan, you can apply for this $10,000 and grant. They will forward you the $10,000 grant. If you get declined for the loan, you can keep the money. If you get accepted for the loan, then that gets added to the loan. So the understanding is that if you're going to take the $10,000, you're going to be on the hook for at least that $10,000 if they accept you for the loan. So you have to be prepared to pay that off. I will say that just a couple things in mind. It's $10,000. This is the Economic Injury Disaster Program. So again, you could negotiate to have it paid off over 30 years at 3.75% interest. So it really would be a pretty small amount that you're paying down every month, and you would have the option to pay that back earlier.
I have a question about independent designers who might be paid royalties, people who get royalties. They may get some royalties, but may not be able to work other than to receive the royalties for work previously done. So for example, if you're a furniture designer, you've completed a project and you get ongoing royalties as a result of past work, but you have no new work coming in. Are they eligible as independent contractors for these programs? So
they are eligible. You are going to have to plead your case to your state's unemployment. Again, you want to go for unemployment because again, we're talking about loss of income. You're going to have to plead your case to your state's unemployment agency. And keep your fingers crossed that you're actually talking to somebody who understands that concept, that you're getting royalties for prior work, but all of your current work has dried up. And bear in mind that, depending on the level of royalties that you're getting, it may exceed an amount that the unemployment agency may approve for you getting unemployment.
Okay. We're coming toward the end here, but I do still have some questions. So do you still use, someone's asking, do you still go to the SBA website to sign up for the unemployment? And is each state required to include 1099 employees now?
Okay, so no and yes. So do not go to the SBA website if you're looking for unemployment. You've got to go to your state, and every state is required. This is federal legislation to provide unemployment to independent contractors and to add that $600. They're being funded from the federal government to do that. And by the way, to add that, it wasn't asked, but sometimes people do ask this question. If you work in multiple states, which I've clients that do that, you have to apply for unemployment in each of those states and show whatever income you were making there. So you would be getting different checks from each of those states. How the federal government is then going to allocate that $600 extra that you're getting, I don't know the answer to that, and I don't even know who in the federal government does. But that's something that even regardless, you should be going after whatever income you made in various states.
Great. So Gene, I just want to let you know, lots of people are posting their appreciation. This is really good. We're really enjoying the information. Before we sign off, I want to let people know that this video, in case you couldn't take it all in and you want to hear it again, it's going to be up on our website. It's going to be up on this Facebook page. And you can, Gene, you said people can tweet you questions.
Yep, so it's a Gene Marks. It's at GENEMARKS is my Twitter handle. My contact information is on there as well if you want to reach out to me other ways. And also, we've been talking about this for a week now since all this has been going on, and I cannot even tell you how the information has been changing from the Treasury Department and the SBA, right? Big surprise. So if something does change after you've watched this video or you're still not sure of something, just tweet at me and I'll let you know, if it has changed or confirmed, any of those facts. So bear with us. It's a moving target.
Gene, thank you for your time. We really appreciate it.
Thanks, guys. Good luck.
All right. Thank you. And good luck. I hope you don't get overwhelmed on Twitter, but I hope people tune in to get lots of great information.
Good luck.
Bye-bye now.